Fears have risen for China's hard landing. Shortview predicts a sherbet lemon economic landing, hard on the outside, soft on the inside. Joining me for his insight is Wai Ho Leong from Barclays. Wai Ho, 6 interest rate cuts in a year haven't yet revived China's growth. If official data released next week fails to show a pickup, growth goals may be missed for a second straight year. How is China's economy responding to waves of monetary policy and easing?
It's responding well. The strong doses of monetary expansion has buffered the economy from a hard landing. While the growth rate is not strong at the moment, the risks of a crash has been greatly mitigated. Of course, it's still widely expected that China's growth will continue to slow in the coming years because of demographics.
What direction does the domestic economy, manufacturing figures and imports point China's economic landing to fall in? And do you predict a hard or soft landing?
It'll be a soft landing. More importantly, I think the economy is now rebalancing itself. So it's shifting from a manufacturing focus to a more services-oriented focus. So that means we need to adapt the way we look at China and also develop new ways of assessing that economy. That means as manufacturing indicators get weaker, services indicators like e-commerce are becoming more important. Broadly speaking, it's a story about the economy coming of age and growth moderating to a slower but sustainable level.
China has rebounded in the global stock market. The Shanghai Composite has extended gains this week. Do you believe in China's economy being restored?
Yeah, I think so. This is a clear reflection of that hard landing risks are being priced out of market expectations and ushering in a greater period of calm for markets. It may be a sign that the market also thinks that Chinese policymakers have done enough to allay some of these concerns that they had earlier this year.
The Philippines' GDP growth was the third fastest among Asian countries, growing 6% in Q3. Arsenio Balascan said today, data is an encouraging sign of a steadily growing economy. But moving into 2016, can we expect consistency?
I think the economy will keep its momentum of growth next year, and growth will continue to be among the fastest among Southeast Asian countries at least. But there are certain risks that we must be cognizant of. There's a presidential election in the middle of the year, and the Philippines is also notoriously susceptible to El Nino weather patterns, which are now intensifying in the region. So that might reduce and moderate the pace of growth a little. But I think on net, we will still see the Philippines deliver decent growth next year.
China and the Philippines are the success stories. What economies in Asia are underperforming and what are their main challenges?
That's a very good question. The nature of the slowdown is centered mainly in industrialized economies of Asia. So the likes of Taiwan, Korea, and Singapore, to a lesser extent, have been the hardest hit in terms of growth. So we expect this trend to continue because world demand, as it is not strong. This trade recession means that the slowdown will be felt by the industrialized corner of Asia.
Well, Wai Ho, thank you for your insights. Tomorrow brings the last day of this trading week, so be sure to check in on our weekly wrap-up to summarise all of the biggest market events for this week. Goodbye for now.